Hello and welcome to another video of Eternal Gains. The markets are red today. Everything seems to dump. And I want to grab this opportunity and talk to you today a little bit about the psychology of trading and also the psychology of DeFi, which is in essence the same. Now, what is the problem? I found this really cool thread here from Secrets of Crypto. And he made a really nice thread about this topic. I'm going to link it in the description as well. But in particular, I want to talk about this part here, where you can see dump money trades on emotions, right? Now, this is a very important part. Many, especially newcomers, get wrecked, right? Which means they lose their money because they trade too emotional. They get very euphoric when it goes up and they get a lot of fear when it goes down. And like this, they always make the wrong decisions. If you look at Bitcoin today, it's not looking in particularly good. We had like a downtrend going on here since a while now, right? And yeah, so many people might start to get scared at this point, right? So my advice at this point is if you didn't already sell your Bitcoin or Ethereum, don't do it now. Now is pretty much the worst time you could sell. And this is very nice illustrated in this graphic here. You see dump money. Dump money is, the people which get wrecked, basically, the people who lose their money. They would buy the top, right? And then they see, oh, I'm buying the dip, right? It just drops a little bit. They say, oh, I buy the dip. It goes lower. And then they think again, oh, now we are definitely on the bottom here. We have to buy more, right? Now it drops again. And now the people get scared and they start selling. And that's exactly what the big boys want. They want you to sell on the worst possible spot, which would be around here. Of course, this theory is not suited for all coins. If you're talking about micro caps, which have just a few million of market cap, this is a whole other game, right? So we're talking about kind of blue chip, mid cap to large cap coins here, or even stocks or whatever you're trading. The key is that Bitcoin will most probably be here in 10 or 20 years. Ethereum most probably will be here in 10 or 20 years, right? So if you sell here, then you basically did the worst exit you possibly could do. So assuming Bitcoin and Ethereum is here in many years, there's always going to be cycles, right? Which means price goes up, price goes down. This is a 4-hour chart. As you can see, it comes up, down, up, down. If you look on the daily chart, it's even more clear. For example, here, we had a nice run up here throughout December and till April. Then we had a huge dump, and now we are higher than before, right? What does it mean? Dump money would have sold somewhere around here, right? Because they say here, oh, now it can only go up from here at this point. Okay, nice. Then they think at this point, oh, now I have to buy more because we are going up, we are going up. No, it doesn't. It comes down. And somewhere in this area, many people start selling because they think, oh my goodness, I did a big mistake. This thing will never come up again. We will go to 20K, 15K, whatever numbers were circulated at the time. What happened? Price reversed and went back up. Yeah. So this one is basically you go on this side and you continue from here. So people are selling all their stuff and they're frustrated and they're angry, you know, and then it starts again the cycle, right? They buy again the top and they sell the bottom. That's exactly what you want to avoid. And I would say two of the most important factors here is FUD and FOMO, right? FOMO stands for fear of missing out. FUD stands for fear, uncertainty, and doubt. FOMO means if the price is shooting up, let's say we are somewhere here, then people think, oh my goodness, look at this. It only went up, it only went up. If I don't buy now, I gonna miss this train. You know, I gonna miss this whole entire pump. I have to buy now. And this is exactly how it happened, that people buy here or here, because the whole topic, Bitcoin, for example, in this case, is so hyped up that everybody's talking about it. You hear about it in the media and whatnot, and then you think, I have to get on this train right now, otherwise I'm going to be left behind. But since the big pump already happened, you're going to be late to the party, and you're going to be the person who buys on the top. Okay. Now, FUD is exactly the opposite. FUD is basically happening down here, which means you are at a point where you are just so frustrated and so angry about the whole price action that you think, you know what, I want to get out of this. This cannot work. This is shit. This will never work out. This thing will go to zero. So you start selling here. Okay. So your two worst enemies is fear of missing out and FUD. Now the question is, obviously, what can we do about it, right? Because we are here to make money in the long run, and we are here to grow our portfolio in a sustainable way. First of all, whenever you are in a state that you think, crypto, DeFi, it's at the end, it will crash, it will go to zero, then you have to sit back, breathe a little bit, take a few minutes and really think it over. Don't act out of an emotion. Don't act out of fear or out of euphoria, because those are the traits usually which are the worst. Always when you have this feeling of, oh, this thing can only go up, I have to buy now because otherwise I miss the train. Or when you have the feeling like, oh my goodness, this thing goes to zero, it was the worst investment of my life. At this point, you always have to sit back, breathe a little bit, and certainly don't trade. That's the most important thing. Again, we're talking about mid to high cap stocks or coins here, right? For little coins which have a few million market cap, of course, they can go to zero, they can go whatever. We're talking about stuff which is kind of established. Bitcoin is a very good example for that. Okay, so what are smart people are doing, right? Smart money. Smart money, first of all, has a plan, right? They understand that when something is pumping like crazy, like this one here, that it will not pump forever, right? So what smart money is going to do, they will look at this, for example, right here, and they will wait, okay? Let's see how deep it can go. Let's see. Let's just wait. Obviously, on the same note, you should always have some powder on the side, some dry powder, meaning you should have some funds, like in stable coins or in USD or euros or whatever. So if the situation arises that you are ready to pull the trigger, right? So smart money will just wait in the situation and see, okay, what's happening? How deep is it going? And when you see that it's kind of tapering off, it's going a little bit sideways and starts maybe coming up a little bit, then this is the time to buy. Even if you buy here and it goes still lower, you buy again, right? And then you buy again. And you see, oh, there's a little pump. This would be something like this, okay? Let's say you bought at this point, right? It goes lower, you bought somewhere here, okay, it falls. Then you get the first pump, and you're going to sell off a little portion right here. You see it comes down, it reverses, then maybe you re-enter somewhere here, just to mitigate the risk of another real dump. If you bought here, and you sell here, you made already a nice profit. So you take a few chips off the table, right? You let it run, you see what's happening. If it comes back down and reverses, then you go back in, and you would have made another nice gain right here, okay? Even if it comes back down a little bit here, you are still in a good shape. You would be pretty much on break even at this point, but you would do the same tactic again here. So it comes up, you had a nice profit. If you re-entered somewhere here, you had a nice profit. It comes down, you sell something around here. You wait. If you see it reverses, you come back in and it goes back up. So always have a plan, what you want to achieve, what you want to do. Don't just blindly throw your money at everything which is green or pull your money from everything which is red. Have a plan and think what you want to do. I will link this one in the description. That's a really good read. I would recommend everybody to read it. If anybody's interested in TradingView, I also will leave an affiliate link in the description. You can sign up for a free account with them. TradingView is pretty much the best software for charting and looking at the charts. So I hope that helped, and see you in the next one.